After starting up the Morowali Industrial Park, or the IMIP, in 2016, Tsingshan now has some 3 million tonnes of capacity, and Indonesian stainless steel capacity is now expected to increase to 5 million tonnes next year.
Hello, and welcome to another one-to-one mining investment APAC online content session. Today, to give us the outlook for the nickel industry, we have Angela Durrant, Senior Research Manager for Nickel Industry Costs at Wood Mackenzie.
Hello, everyone. Thank you for putting aside some of your valuable time to listen to my presentation today. My thanks also to Amy Rotman and the one-to-one team for hosting the virtual AsiaPac mining investment event this year. I've titled today's presentation Highs and Lows because over the last year and until now, nickel prices have continued to surprise. In 2020, prices increased steadily despite a significant surplus hanging over the market, which was in large part brought on by demand destruction caused by the global coronavirus pandemic. But after defying the fundamentals for the last 12 months, prices tumbled in late Feb and early March this year, falling by almost 10% in a single day on March the 4th. So the question is, are we finally seeing the end of the dream run for nickel? Moving on to our first slide and looking at the last 12 months in a little more detail, we have highlighted the movement not only in nickel prices, but across the whole LME industrial metals suite. On the left-hand side, we can see that when the lockdown ended in Wuhan province, on April the 7th last year, LME metals prices started to rise across the board. And this was aided by China declaring itself COVID-free, then implementing a yuan 3.6 trillion stimulus package in early May, equivalent to around 506 billion US. The declining value of the US dollar also aided metals prices over this period, and China watchers were keenly looking for signs of industrial recovery. By the end of 2020, however, the increasing trajectory in prices had ended for all metals other than nickel and copper. The red circle in our chart on the left-hand side is magnified in the chart on the right-hand side. After prices peaked for nickel on February the 22nd, $19,689 per tonne, we saw a sharp downward correction, as I mentioned earlier in my introduction. For nickel, we believe there are a couple of issues that contributed. First of all, we understand that the unrealistically high nickel prices prompted a swathe of short selling post the February high. This was followed by an announcement by Tsingshan, the world's largest stainless and nickel pig iron producer, regarding its intention to supply up to 100 kilotons of nickel matte from its facilities in Indonesia to CNGR and Haiyu in China to produce nickel sulfate for electric vehicle batteries. The big news here was that the matte would come from NPI. And the reason this announcement had such a perceived impact on price was to do with a shift in perception, in that the market expected that NPI would always be used in stainless production and would never really be available to the battery market. However, it now seemed that the market would be able to access matte from NPI for the battery sector, meaning any tightness previously perceived for the battery sector was no longer going to be a problem. For the most part, however, we believe that the short selling had a greater impact on prices recently than the announcement by Tsingshan. We do, however, want to point out the impact of this company's announcement, and it cannot be ignored. Moving on to the next chart, we can see that this highlights what has happened with NPI and stainless in Indonesia since 2016, and the importance of a company like Tsingshan. If we look at the chart on the left-hand side, we can see that Indonesia has emerged as a powerhouse in stainless steel and nickel pig iron production. After starting up the Morowali Industrial Park, or the IMIP, in 2016, Tsingshan now has some 3 million tonnes of capacity, and Indonesian stainless steel capacity is now expected to increase to 5 million tonnes next year, as the country's other producer, DeLong Obsidian, ramps up its 2 million tonne operation. This all means that nickel in stainless and nickel in NPI for export is rapidly expanding, which is illustrated here by the blue and grey bars in the chart. Diverting both nickel pig iron and stainless production from China to Indonesia means that China is now importing increasing volumes of long products or billet and cold rolled coil from Indonesia. The surge in imports coincided with the startup of Durrant Obsidian in 2019, but has also been supported by Tsingshan's output. So with 5 million tonnes of capacity in place next year, Indonesia will have a remarkable range of products to sell, from slab to hot and cold rolled flat products to ingots and billet and for long products, all available within 6 years of entering the global stage. There has been no other experience like this in nickel, apart from when China first embarked on stainless steel and NPI production in mainland China. The implication is that China, with Indonesia's help, is becoming increasingly self-sufficient in nickel. China will need less Class 1 nickel for stainless steel making, and this in turn means that the country will likely require less imported ferronickel from Western world suppliers. It will ultimately get more of its nickel requirements from Indonesian NPI. In the chart, we can see that the grey bars representing Indonesian nickel pig iron imports will expand and displace the imported volumes of ferronickel, which is shown here in green. China's ability to lower its stainless steel production costs by pushing so much production off-site into Indonesia has only been made possible by the country's investment in NPI in Indonesia. That investment coincided with Indonesia's ban on nickel ore exports being confirmed in January 2020, and ore production for export from the Philippines being unable to respond to China's raw material supply gap. Chinese stainless melters have been sustained by Indonesia's policy to convert ore into NPI over the last 5 years, an effort which transformed the country into the leading producer of nickel pig iron in 2020. Going forward, we expect Indonesia's increase in nickel pig iron will more than offset the decline in output from China, but will still allow for growth in stainless melting in China. I should point out that Indonesian NPI isn't just being made for export to China alone, it is also being readily consumed in Indonesia's stainless steel operations. Last year, from just 2 companies, which we mentioned before, Tsingshan and Durrant Obsidian, Indonesia overtook the USA to become the world's 4th largest stainless smelter, producing 2.7 million tonnes. And this year, we expect Indonesia to move above India and become the world's 2nd largest stainless smelter after China, with 3.7 million tonnes. Looking at the global perspective for nickel demand, we can see from the map that despite the pandemic, demand growth was achieved in China in 2020. This helped to offset the global decline in demand, which was significantly less than expected at 1.6% compared with 2019. For 2021, largely supported by growth in Asia, as we can also see here in the bars above the Australian part of the map, we expect headline demand growth of around 10% globally and over 9% in 2022. However, these solid demand numbers will not be enough to offset the current stock overhang and the expansion in supply. Looking at the fundamentals, the combination of surging supply and demand destruction during 2020 due to the economic lockdowns has left the market with a large stock overhang, which is likely to dampen prices post-2021 and is potentially already doing so. The chart on the left-hand side shows stock days increased to just over 220 last year, the highest level achieved since 2017. While we expect stocks to be drawn down in 2021 and the market to move into deficit by the end of this quarter, we expect that the market will return to surplus in 2022 and remain that way out to 2025, which is shown here by the chart on the right-hand side. At the same time, this will keep prices at annual averages well below what we are forecasting for this year, which is around $8.85 per pound of nickel or $19,514 per tonne. So where is all this supply coming from? Well, going back to Indonesia, I think these charts really illustrate the emergence of this country as a major nickel producer. The chart on the left-hand side clearly shows the expanding market share of Chinese, which is in the dark blue, and Indonesian NPI in yellow, and the subsequent decline in ferronickel in the light blue bars. However, as can be seen on the chart on the right-hand side, the volume of ferronickel produced hasn't actually decreased over time. MPI has simply added to the total, with volumes increasing from around 300 kilotons of ferronickel in 2005, expanding out to 1.5 million tons of MPI and ferronickel in 2021. This year, Indonesia will actually account for around 54% of global Class 2 nickel production, with its share expanding to 60% from 2022. Which is completely remarkable given that MPI production only commenced there in 2015. There are now more than 6 large projects taking shape in Indonesia, but as I've mentioned, it's Tsingshan at Morowali at the IMIP Park, Weda Bay at IWIP, and Virtue Dragon that are leading the way with new capacity. We estimate that total nickel in MPI production will expand by almost 30% this year to take the total up to just over 1.2 million tonnes in 2022, which again is remarkable given total production was less than 100 kilotonnes of nickel in MPI in 2016. From a cost perspective, we can clearly see that the dominance of Indonesia here, but also China in the industry cost curve in the chart on the left-hand side. Both countries now account for the lion's share of global nickel output. At a C1 cost level, Indonesia is a lower cost producer than China, but both countries are achieving solid margins at current nickel prices of over $16,000 per tonne or $7.27 per pound nickel. The chart on the right-hand side illustrates the difference between producing nickel pig iron in each country via process route. So either by producing through EAFs, electric arc furnaces, or RKEFs, rotary kiln electric furnaces. Given Indonesia's own captive ore reserves, the ore purchase costs are kept low, and as a consequence, this keeps the cost of production and ore freight to a minimum, meaning that Indonesian costs are around $2 per pound lower than those in China on a C1 cost basis. Clearly one of the main motivators for China investing in Indonesian capacity in the first place. But moving away from MPI, I'd like to point out that there are other sources of supply-side growth that we should be watching out for in the near term. To satisfy the commonly accepted growth story in battery raw materials, we can also expect some new production of specialist nickel chemicals this year and next, as well as some conversion of existing production into chemicals. Nickel West Kwinana operation here in Australia is reducing its saleable production of briquettes by converting around 22 kilotons per annum of its 66 kiloton per annum capacity into nickel sulfate. And we expect production for that to begin middle of this year. Another current nickel unit producer is Terrafarm in Finland. It's produced an intermediate nickel cobalt mixed sulfide, which is refined or consumed directly by third parties. But starting this year, all of its production will be converted on site to sulfate. Next year and into 2023, we'll get a better idea of how the Indonesian projects of OBI and QMB currently under construction are faring, because they both plan to be producing for the battery raw materials market. As I said, much of this nickel sulfate will be heading to the battery sector, especially in Asia. While the pandemic kept consumption of nickel in precursors flat in 2020, highlighted here by the circle on the chart, at around 106 kilotons, we expect that demand will more than double by 2025. Expansion beyond this point will most likely be from China and the rest of Asia, which is shown here in the red area on the chart, although we do not yet know exactly where a lot of that capacity will be sourced. By 2030, battery precursors will account for around 20% of global nickel demand, increasing to 37% by 2040. So given all of this supply, we can see that there is no real supply gap emerging until 2027. But as demand from the EV sector escalates from 2028 onwards, new nickel supply will be required. And to incentivize this, we'll need a long-term nickel price of around $8 per pound nickel real, or converted to $17,600 per tonne. And so without further ado, I'll leave you here with today's key points and we'll sign off. Thank you again for your participation, and I'm happy to take any questions. My contact details are provided in one of the slides at the end of this presentation pack. Thank you again.